Comes the money.
Here we go. Money talk.
Here comes the money. Money, money, money.
Dollar, dollar. Dollar, dollar.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money, money, money.
Dollar, dollar.
Hello and welcome to Money on the Floor Currency Trader. Right now we're looking at the New Zealand dollar 4-hour chart. No reason, we're just looking for a chart. Basically we're looking for a particular pattern. Let me show you the pattern and it'll make more sense to you. Here's our pattern. Basically we have contraction where it gets real small. And then from here we have expansion where it starts to break out above that, but it gets a little bit bigger. This is where a lot of people get trapped. We think it's going a buy trade and we get whacked and it ends up taking our money back. We get out and it goes back in the direction anyway. And then we have the trend phase, which is where you make the money. It's hard to know which one you're in except you can find the contraction. After that, you look for the whipsaw. Once you get the whipsaw, you got to remember you have the average price line, which is the middle down here. So you could find the middle of wherever you're working at, draw a line across there, just put a trend line. At least to give you a good idea, so that once you see the whipsaw come into effect right here, moving up and down, and then from there you can go ahead and get into the trade. But I'll show you how I like to deal with it. But just so you understand, there's 3 different aspects of this. So you got the contraction, expansion, and the trend, which is basically the profit taking. From then it goes back into contraction all over again. So it just goes over and over and over. But most of you already know this, called consolidation. Same thing. And we get a little whipsaw, and then boom, we take off. Like a lot of the yen pairs, they go the opposite way. You'll see a big spike. A spike up or a spike down, like a spike down like this one here, then it goes the other way. Happens all the time. You hear me talk about it. But just to give you an idea of what we're looking at. You get that out of the way. Now in this pair here, this is how I would normally trade, is I look for resistance points. Resistance or support. This here would be support because we're bouncing off of it. So I have an indicator that finds it for me. Doesn't mean it goes away because back is a little wishy-washy. But I have my candles. My candles will turn green. Now once I see I'm starting to go up, I will go ahead and do a buy trade at this time. Now what I usually do, which keeps me out of trouble, is I'll put a trend line on this trade. And I'll buy it till it gets to a certain point and it'll cross my trend line. That time I will exit the trade because I no longer trust it. What are we going into? Consolidation or accumulation. So right now we're just going back and forth. And then from here, what do? We're going up, down, exactly like what I showed you. And there's the trade. Well, it happens all the time. It's crazy how it works. I'm looking at it right here and looking at it with you. I see exactly the same pattern. So weird. You got the contraction, which we can just call, it's also called accumulation, consolidation. And over here is where they're trying to get their trades going, the big banks. So they're trying to get in here, then they're moving it down for a better price, and then boom, look out. But we see the same pattern. It's very interesting, kind of mind-blowing. But there it is. There's our trade. Now this is what I'm trading off of, stuff like this. I see this. Here, I could put a trend line here, and this would help too. You don't even need anything. You don't need any colors. You don't need anything here at all. All we need to do is put my trend line if it lets me. There we go. So basically, we're in a sell trade. We're coming down. Boom. We have support. We start to bounce up. It looks like we're in a little triangle. We're not sure which way we're going. We're going to go down. We're going to go up. At this point, I wouldn't do anything until we break out. Now the top, I see we're breaking out the top as my candles are changing color. So at that time, I would close the sell. I would open a buy trade. And I would trade that up. until it did the exact same thing. And it goes right back into consolidation. And then from here, it goes into that expansion process we were just talking about. Or if we tried to buy this, you just get whipped out of it, and it comes back down. But the thing I was telling you about is to put a trend line down the middle, which would basically be there. So now you know when you come down to here and don't take the first move. Wait. Yeah, you might lose a trade, but that's okay. You can always get another one. Give it a little time to make sure, even if you got in up here. The thing is look, it came back on us, and then it came back up. Now if you get in there, you got the safe trade. But my indicators would have helped me out anyway because I didn't have it. I had a buy trade here, so I'd only be looking for buy trades here. But here, this would have told me that it was a buy. But if I would have put a trend line on it again, as soon as we started going up, I crossed it here, I would have closed my trade. Maybe break even, maybe a loss, chance I take. And then I'm going to be trading this down. That time I put another trend line on it. Trade it down. Now this I would have got into profit. Would have come up. It would have started showing me that I'm going to go the other way. I would have just closed the trade. But for sure, once it crosses that trend line, I close the trade. So maybe I have two break-even trades, but I think we would have made a little profit on both. But let's say we had two break-evens. We didn't make any money yet. It's fine. Here's where the money is. This is the trend. Boom. Now, how do you know when the trend ends? That's the whole part. That's what the trailing stop's so important for. That's what all that stuff is. We went up, what is that, 15 pips? Yeah, something like that. Actually, more than that. I can't even see it so late. Sorry, guys. We would have got in the trade here. It went up to there. It's like 150 pips. So we got 150 pips up there. Now, but thing is, if you didn't get out at this point, where we go back to our trend line, that's why I always use them, because they keep me out of trouble. It gone up to here, now it's starting to pull back on us. How do we know when to get out? I cross the trend line. Or I see this indicator light up, I'm just getting out. But let's say we don't have that indicator. How do I get out? It crosses the trend line. That bar right there, I'm out. I only lose a little bit. And now I see we're going sideways again. So that's why I like trend lines. That's what keeps me out of trouble. And that's what, if you don't use them, that's why the 90% of traders lose. And that's why they call it the 90-90-90 rule. The brokers all know that because 90% of the people who got into their brokerage in 90 days are going to lose 90% of their money. So it's pretty crazy, but it's true. But this will keep that from happening. That's why I'm showing this to you. It's very important. I mean, the other part, this here just tells you what's going on. This shows you how it's so easy to get whipsawed in and out. You know, you got the contraction, which we call it consolidation. Then you got the accumulation where it starts going up and down, whipsawing. All it's doing is trying to get people in and then taking them back the other way and taking their money. Then they're using them getting out because of fear that they're going the wrong way. They're getting out down here, and then they're all getting in. They're doing the opposite of whatever we're usually thinking. But it's hard to think the opposite when your mind sees this. But if you're using trend lines, it'll save you from all this. You don't even have to worry about this. But you need to know it exists. That's why I'm showing it to you. It is very important. It's part of trading. You need to understand that. Most people don't even understand that. But if you use the trend line, you will understand that. So when I give you a trade and I say, okay, we have a buy trade on the New Zealand dollar, it's because I got my arrow, I got all my stuff lined up, I'm turning green and we're going up. And we put a trailing stop on it. So once you get up into here, you're going to have a trailing stop. So when it comes back on you, you're going to be getting out up in here. You're no longer going to get all of it all the way back to break even. Because that's what this thing does. The market's designed to take you back to break even all the time. So it goes up, and what does it do? It takes you back down to break even. Goes up, takes you back down. Goes up, takes you back down. All it's trying to do, if you stay in the market long enough, it'll take back the money. That's the problem. That's why we need the trend line. That's why we need the trailing stop. Now we do need to have an initial stop of 15 to, 10 to 15 pips just in case the market does decide to go the other direction. What if something happened? Something political, something crazy that can't even unexpect, and we're just going to dump. Well, if it's a really bad move, it's going to jump anything. But the thing is you want to have your protective stop in there just in case. I usually like to have it about 10 or 15 pips. But I just want to show you how I trade and how it keeps me out of trouble. These are the kind of things that made me profitable. And if you practice these, it'll make you profitable. And also you'll start seeing things. You'll start seeing the triangle. You'll start seeing other things. So, the rising wedge. You'll start seeing all kinds of stuff. So, anyway, it's important. It's very important, actually. I mean, it seems like such a silly thing to put a trend line on, but if you don't do it, you're missing out. How do you know? There's no way to know. Hardly any indicators on here. We just got a few. But if you could take those off, just with a simple trend line, you could trade. It'll keep you out of trouble and keep you into profit. All you're trying to do is get in and out of the market and keep the money you've got. And the less time you spend in the market, the better. Some people, they feel they need to be in a trade all the time. Well, that's bad because that'll get you into these wrong phases. And that's what you don't want. So all because you came up here and made a profit, we're not going to jump back into a trade unless we have a trade. That's the whole key. See, we traded this up. We're going to go sideways. I don't know if we have another trade down. I'd be scared to take that trade down. We're just going to go go sideways again, then shoot off again. But with trend lines, it makes it so much easier. You feel more comfortable. When that candle goes red, and you're coming off resistance, and you're selling this, you know that you're going to get out when you cross that line. Even if it's just going sideways, you're going to get out. Same thing over here. It just goes over and over and over. Same thing going down. It's all the same. Everything relates to everything. Just over and over and over. This one could go a long ways. You never know, but it could shoot up and take you out. So hopefully this helps you. It helped me. It helped me keep me profitable. It still helps me. Helps me all the time. That's how I know when I want to trade. Now, this is a 4-hour, what is this, a 4-hour chart. So now if you can do this on a 4-hour chart, this is the other ways to use time, use the different time frames. On a 4-hour chart, you can see we're in a downtrend. So now you can go over to a 1-hour chart. 1-hour chart, for sure, it's in a downtrend. Look at our same trend lines are still working. Nothing changes. Go to a 30. Go to a 15. So now you see we're in this strong downtrend, right? Let's go back. Strong downtrend. Would you buy in here? You went down to the 15. Says to buy. I'd be real leery of it. So it's something to think about. Let's say you did buy. As you bought, put a trend line on that. If that thing starts coming back, get out. You made a mistake. But I guarantee once you saw that 4-hour chart and you took it backwards, strong down. I mean, it's got to move up eventually. That is true. But you go to the 1-hour and it says down. Wow. 30 minutes says down, but it's starting to move up. 15 minutes is starting. We've got a buy indicator. Says we might be going up. Then I come over here to the eye panel. The eye panel still tells me down. So, and the other thing too is we want to be using as our currency strength meter. I think that's it. Yep. So we got the New Zealand dollar. We look over here, New Zealand's weak, dollar's strong. So we're still pushing hard to the down. There's no way I'd be buying this. No way. So, I mean, everything's telling me not to ignore that sign right there. Everything. And you just got a trend line across this. You break that, I'd be selling that. So it's just another way to look at things. Even over here, you got this triangle going on. So if let's say you did try to buy this and you came up into here and it broke the trend line, I'd be getting out. And tried to go up again. You think, okay, maybe I need to buy that one. But then it came back again. So this one you made money. This one you're going to break even on. Then you think you're going to sell it, but then you crossed again. So like, okay, now I'm not sure what to do. But then you see that we're having this kind of a triangle. So now you know you're going to have this one through here. So the trend lines give you a lot to look at. Looks a little crazy, I know, but it helps a lot. So then you realize you're in a triangle. And what do? Triangle explodes, and it exploded out of that triangle. Made all that profit come down. And we crossed, we got out. Yeah, it went down some more. Well, you can't get everything. You got to get what's safe. This is crazy chasing this little VIX. Who knows what it might do? But it might keep going down. You never know. So it's just another way to look at the markets. All the different things you need. This is all the things that I incorporate in there. I like the I panel because it tells me right now what are my chances of this going. It's getting very even to be 50-50. That's why it's getting a pullback. I see this start to get bigger on the bottom. We already know the dollar's stronger. I'm looking for a sell. Even though I have an indicator here telling me to buy. Doesn't matter. I'm looking for a sell. Especially if you go back in your time frames. Look at this. All sell. Everything's sell. Even a day chart sell. So everything's a sell. So anyway, guys, I hope this helps you. Hope this helps us make money. I hope this helps you understand me. So then you feel more confident in the trades that I'm putting out there. But it's important to put a trailing stop on it after we go past 5 to 10 pips. I usually do 5. Sometimes if it's a real choppy day, I only put 3 pips. I want to get stopped out at break even or a little bit of profit if this thing's going to be going all crazy. So and you never know what you have. But you know, you can tell now that how the market's going to move. So it's only going to go sideways or it's going to trend. So you got to find it. And you know the market's trying to trick you all the time. So you got to use these trend lines to save you and keep you out of trouble. So I've talked long enough. Time for me to go to bed. I think it's already pretty late. 12:30, I think. Yep. So I'm going to crash and look at some more junk tomorrow and see what we can come up with and come up with ideas to make money together. Because that's what I'm here to do. I'm here to show you how I made it happen so that you can either emulate it or find a better way for yourself. But either way, this works. So if this works, you can find something that works better for you. All right. Good night, guys. Bye-bye.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money, money, money.
Dollar, dollar. Dollar, dollar.
Here comes the money.
Here we go. Money talk.
Here comes